Let's get to our next guest, shall we? And we will go to the advisory and get an update on the ongoing public debate about Labor's tax on those with people more than $3 million in super, so that tax on unrealized gains. Jonathan Steffanoni from Legal and Prudential joins me now. Jonathan, welcome. Thank you so much for joining us. This is really stirred up public debate. What do we call it? Division 6 or 296, the super tax reform. What is your take? Is this a storm in a teacup, or is it absolute insanity to be taxing unrealized gains?
I'd first observe that it is quite interesting to see the uptick in debate around this policy at the moment, given the election has been run and won, and also considering that consultation on the policy occurred over 2 years ago. So there's been plenty of time for industry to consider and participate in the consultation. So to me, it comes as somewhat of a surprise that now we're seeing so much of a focus on this policy. Having said that, it's interesting to consider the focus on unrealised capital gains as being the heart of most of the debate at the moment. The policy is trying to do something which is inherently difficult in applying an individual's position to an interest that they've got in a trust. So this policy does have to grapple with this issue of working out a way in which the individual circumstances can be applied at a trust level. So within that context, I can't see a better way of achieving the policy intent here. Treasury did detail in the explanatory memorandum the other options that were considered, and my view is that it's probably the most workable way of achieving the policy objective which government has set here.
Yeah, I take your point that the election gave the Labor government its mandate. So do you anticipate that they will change this bill at all? I mean, could they even just do something as, indexing it for inflation that will quell some of the criticisms?
So most of the debate at the moment does seem quite focused on the fundamental policy intent, rather than on some of the issues which do exist with the bills as they were introduced to the previous Parliament. So my concern is that if the debate is focused on the policy intent, we may not see enough attention focused on some of the issues which do exist with the bills as they were introduced last time. First area there is probably that question around indexation of the threshold. So if there is an acceptance that there is a point at which concessional taxation should no longer apply, it's a really important debate as to how we go about determining and managing that threshold moving forward. So I wouldn't be surprised if there is some movement on that indexation question, notwithstanding the fact that the Treasurer seems to have been quite firm in his position that won't change.
All right, well, it's a watching brief, and it interests a lot of our viewers out there as well. Jonathan, we're in June, end of financial year, and all that brings. What's sort of top of mind when you're thinking about what's to come?
So we get to June, and it's often the time of year where we look at those changes which are about to commence on the 1st of July. It is a nice round starting point for changes to commence. One of those changes which has flown under the radar a little bit but is commencing is the government contributions on paid parental leave. So we saw the ATO issuing an update over the past week or so, confirming that they have everything in place and are ready to go to start making superannuation guarantee payments to individuals who are receiving paid parental leave through Services Australia. Importantly, they've confirmed that will apply to self-managed super funds and APRA-regulated funds. So an important thing for advisors and members to be aware of, that that policy will come into effect from the 1st of July.
And so, do individuals have to do anything, or will that all be sort of taken care of with the whole paid parental leave, process as it stands now?
So individuals who are receiving their parental leave payments through Services Australia won't need to do anything further. The arrangements have been put in place between Services Australia and the ATO to facilitate those payments to be made to the individual's superannuation funds. So quite a bit of work has been done in the back end to give effect to this policy, which will certainly help a lot of individuals out there.
Great. And just finally, so speaking of the ATO has come out with a warning in relation to fake news. I mean, I feel like we could all just walk around with a warning about fake news, but what are the details?
Yeah, this was interesting and came as a little bit of a surprise, but we did see the ATO issuing an announcement expressing some concern that they had around quite a bit of fake news which was being put out there in relation to the preservation age and superannuation. So it is quite interesting to see the ATO getting on the front foot here in trying to dispel some of this information. So they've come out and reiterated what the rules and what the law actually is around the preservation age. But I guess this highlights the challenges that advisors and the superannuation industry generally do face in an environment where there are all sorts of views out there, and dealing with members and clients who may have come across incorrect information may continue to be a challenge as we move forward.